what I'm going to talk about today is something that I call anti-correlation, and this will become more understandable as we go through. What it's basically about is it's a kind of warning sign that you may well see, and you'll sort of see this warning sign. It should sort of trigger this kind of thought of, oh, that doesn't quite look right, perhaps there's a trade in here. And then what you need is a process to then go and explore where the trade is. What exactly is the trade that you can take here. So we'll go and have a little look at this. I'll try and talk it through, and this was something that occurred on Monday, particularly morning, but it was only into the afternoon. It's keeping that theme and that idea going throughout the day that enables you to be able to take that trade on. So let's go and have a look at this anti-correlation trade. Basically, like I say, it's a warning sign, and this is a situation where the conventional idea, your sort of conventional correlation, isn't there. And this is something I know is particularly in a stocks bond relationship. So most people are reasonably aware of the general idea that if stocks rally, bonds generally fall. If bonds rally, stocks generally fall. So you have this inverse correlation. This is essentially a bit of a kind of risk on, risk off scenario, whereby as people want to take more risk, they will sell bonds and buy stocks, or the inverse of that. So when you see both moving together, this can often be a little bit of a warning sign, particularly when they both move up together, to think something doesn't quite look right here. Now, it could play out, and you will get these scenarios where it does play out that you see bonds and stocks rising together all day. So the important thing then is to start to think about, well, yes, there's a potential trade here. And this is with so many things, so many indicators, so many patterns that you see. This should just be a trigger to think, right, maybe there's something on. Maybe there's a trade. So what you now need to be thinking about is how each market got to where it's got to. So did the moves take place together? Did one catch the other up? Which one's got a better base? And what I mean by that is, which one looked more set to do that kind of move? If you took away the move that you've seen and said in the morning, which of these two markets do I think is more likely to go up today, which has the better scope? Well, that's where you can say, well, quite possibly that's the market that's right, and the other one may be wrong. So you kind of try to sort of go through this process of asking yourself, well, what is going on here? What's important, and where have these moves come from? The most important thing, though, after that, is to think about, can this reversal be played? You may have this idea, and the market may be saying to you, yes, this is on. But until you actually get to a situation where there is an access, and we always talk about access points, till you get to that point of access, where can you take the trade? Well, at that point, there isn't a trade. And what's going to help you is by considering these elements of how the move happened, where the base of the move is going to also, when that access point develops, you're going to be able to say, okay, well, what's got greater scope? Which market has throughout the day created a stronger move and perhaps has less reversal in it. This will become clear when I give you a couple of examples. We're going to look at the DAX versus the BUND from Monday morning. So this is what we got, and essentially what you saw is throughout the day, so this is the whole day on an hourly chart. Throughout the day, DAX rallies up to recent highs, fails to keep going, and rolls over completely, taking out the entirety of the previous 2 days range and filling in the gaps that have been left behind. The BUND, equally early on in the morning, puts in a rally up towards recent highs, dip back, and then closes back up towards the high. So by the end of the day, the inverse correlation has come back. stocks are down, bonds are up. But early parts of the day you saw both of them sitting up near highs. So this is where you then need to consider, okay, well, how have these moves developed? Where have they come from? Which one looks like it's got greater potential to stay where it is? We'll take this down the time frames and look in a bit more detail at the beginnings of these moves as well. So with taking on the DAX first, what we've been left with here is quite a lot of gaps. And after a rally going into Christmas and then just after Christmas, what we've then seen, the last couple of days of trading really is a bit of weakness. We've reached highs and we started to then back off these record highs and then started to back off a bit. 2 days of weakness followed then by a gap up, an immediate rally. This doesn't look like a great base. You know, we've got gaps left behind, which is never a convincing sign of a move higher. The movement up here that has created the gap has been done on low volume as well. So a little bit of a less convincing move compared to the BUND, which has sold off, excuse me, sold off, and then instead of gapping in any direction, has in fact then stabilized. We've built a bit of a base. So after a low has been made, we've risen, consolidated, test down, and then moved back higher. So it's sort of confirming the strength. And on top of that, when you get the break, so these 2 days here, this complete balance and then test and bounce, are the same as these 2 days where we drop from a high and then continue to drop. So the strength would seem to be in the BUND. And therefore you've got space for the breakout. You've got a point where you can think, yes, there is a scope for a move higher. And that comes here. Excuse me. Coronavirus hopefully will go soon. That comes in here. As soon as you get above 177.75, 177.80, 83 area, that then gives you the potential for a move higher. So it's about considering the difference in these two moves. Could the BUND go higher? Coming in on this morning, you would look at that and think, yeah, break these highs, there's scope for a move higher. Whereas the DAX, coming in on the back of 2 days down from recent highs, to gap up and then rally would not necessarily be the sort of early expectation. It would be sort of a lower likelihood trade or lower likelihood of expectation that you would have on that. So in terms of the base of the move and where the moves have come from, you might more reasonably be able to say that BUND perhaps looks like it should be going higher more than necessarily the DAX does. So let's now take this onto a shorter time frame and go and look at what you then learn. And so really with anything like this, because really where the idea, the anti-correlation idea comes is once we've got up to here. So this is going from around about 9 o'clock to around about midday European time, UK time. So there you go, same as well. 9 o'clock up to around midday, DAX sits up at the highs, BUND also sits up at the highs, and essentially both have put in a strong rally and sat just below the peaks of their moves. But it's in the detail of how these moves happened that tells you so much more about the potential to keep going or to reverse. Now the DAX move is done in the first hour, so this is the pre-cash move. Very, very large, fast move up. Big initial balance. And then we get a spike at the beginning of the cash session that then reverses back inside the initial balance. The BUND move, however, tight first hour. So this indicates that we've got potential for movement, but not necessarily anything starting up. Once the cash session comes in, this is where your larger move begins. A cash session move done on significantly higher volume is more convincing than a large pre-cash initial balance. So to start with, you get muted move in the BUND, large move in the DAX. After that, the next hour, BUND rallies, so catches the DAX up, but in the same period the DAX drops and then reverses again. So at this point now you've got this scenario where both seem to want to go higher. So at this point you don't necessarily know which one's wrong. My suspicion would be in the DAX, in the fact that it was willing to drop as the BUND rallied. and has put in this large initial balance, which is generally not indicative of continuation. However, the breakdown comes in the BUND first. So this breakdown here comes just after around about midday. The BUND starts to drop and we get this push back down, taking out much of the morning rally. At this point in time, the DAX stays stable, sits up at high. So at this point you're thinking, okay, maybe it's actually the BUND that kind of got this wrong, and that's the one to fall. But where everything then changes, the BUND already has single prints down here, so it's a little bit of a better sign of strength anyway. Tests down and then starts to reverse, and it's when this reversal comes, as we saw with this rally here also coincides with a drop in the DAX. But what you need to be thinking about with a scenario like this is when we've had this situation where they've both consolidated at highs, if they were going to maintain the inverse correlation, then as the BUND fell, you would expect the DAX to rally, and it doesn't. That's key information. So when that doesn't happen, you're now thinking there is actually still weakness in this. It's already not the most convincing move higher. And so therefore, you've got the scope that on a break through 13,850, we could reverse. And that comes as the BUND then puts in the reversal. So what you then need to look at is shorter time frame and where your access opportunities are. So initially your access is going to be through 178.10 for the BUND. To sell that, looking for this roll down through the single prints. But when this reverses and the DAX is yet to move, if this starts to break below 13,850, you've got an equally large move on in the DAX, and in fact this has got more target because it's got the gap to fill all the way down here. Let's go and have a look at how these then play out. So this is on a 5 minute, there's the gap up in the DAX, charge higher, pull back and move to highs. BUND holds lower, rally and then consolidates. Now what I've got here, the blue line is 3 o'clock. Now the 3 o'clock time isn't the significance of this. This isn't the time that these things should happen. But just serves to highlight what happens and how these things change at that point in time. So prior to 3 o'clock, each have rallied, both are consolidating near highs. BUND then makes a move lower, coming from around about midday, and at this point the DAX stays stable. It's then, as you get to 3 o'clock, BUND puts in very characteristic what I call block reversal trade, and I've talked about this many times in the past. 83 to 75, breaks 83, holds the top of 83 again, which was also a previous high, and then starts to rally. And as soon as this begins, that coincides with DAX breaking. We're already through 50. We then break this low at 19. Once that goes, your scope now is for the move to fill the gap in. There's your trade, there's the opportunity. Go fill the gap, and we get this steady roll down the range, fills the gap, or fills the gap just in here, and that completes the move. So it's about then sort of your opportunity first up was in the BUND. As this broke down, DAX stays strong, BUND starts to reverse. But when the BUND can't continue to reverse and then starts to rally, having seen this rally here, this now enables you to have more belief in the DAX to sell through the lows here for this break. So it's about, this is what I mean by that anti-correlation. All through this morning part here, up to around midday, you're thinking something's not quite right, because you don't usually see bonds and stocks both rallying together. And at that point, it's then a case of working out what's changing, and then as you see that change, then you can execute trades on that. So that's what I mean by the anti-correlation idea. It's not a sort of strict rule, but it's something that when you see two markets that, you know, for all intents and purposes have both done the same thing, slightly different phases of move, but have essentially done the same thing and got to a similar point, you then need to go and explore how they got there, because this then gives you a lot of information about how they may turn and how they may come back from that as the day progresses, and opens up opportunities and allows you to just look at a move and think, does that make complete sense? It's that warning sign that then opens up a potential trade. So I'll wrap it up there, guys. It's good to be back, even if with some pauses. Hopefully I'll be feeling much better by next week. But usual place if you do want to get in touch. I'll be back on this afternoon and we'll go and have a look at what has been happening today, see how things have played out compared to what we were looking at this morning.
If you find this video interesting, if you want to go deep into the Axia training method and how our trading team of 7-figure traders develop setups and strategies and how they learn to build the most profitable trades across all market environments, then join me in this workshop. Now in this workshop, you're going to learn 3 powerful steps we use to train all our traders on both our London and our Poland trading desks to help build incredible levels of consistency. How to predictably understand which setups work and which don't. You're going to learn our 2 main strategies for how we perfect our trade timing before we enter every single trade. You're going to learn the VEL concept, which is our one and only technique we use to leverage our largest trades. You'll also learn how to avoid trading setups that don't work, how to avoid those large losses, and our main method we use to identify them that saves our traders significant amounts of capital. Finally, you will learn how our traders use the power of network learning to find market patterns quicker than ever before, so you shortcut that learning curve. In the workshop, we want to program your awareness of elite performance, to program your ability to choose the right setups, and program your ability to be a consistent trader. So the trades that you execute become more simple and clearer. And I can tell you this, you'll never see the markets the same again. You'll never look at the markets with a narrow view of getting lost in all the noise and confusion. You'll take your first step towards a deep edge market awareness. I cannot wait for you to join me in this workshop. And I think you're in for a massive paradigm shift in your understanding of how to develop as a trader. So join me by clicking on the top right-hand corner of the screen and sign up for this powerful training workshop, or visit elitetraderworkshop.com.